I just wanted to talk about the March 8th ECB policy meeting that's coming up. Will there be a decision about tweaking the forward guidance at that meeting?
Well, you know, I'm never speculating about future monetary policy decisions of the Governing Council. But the situation is the following. The economic situation is rather bright. The capacity utilization is rising, and we do expect price pressures to build up gradually. And of course, this will be also reflected in our monetary policy discussions and decisions.
Is any guidance on forward guidance more likely to come in March or in June?
Well, again, I'm not anticipating our discussions in the Governing Council. But as you might know, my position has been that a clear end date of the purchase program, of the net purchases, would have been or could have been warranted given the positive data. But at the end of the day, what we are discussing in the Governing Council is communication issues. So how guide also the markets on this path towards normalization?
Would your preferred outcome then be to remove the pledge to expand the bond buying if necessary beyond September?
Well, again, I can just reiterate that I will not tell you what the discussion in the how the discussion in the Governing Council will evolve. But this is probably a debate that we will definitely have, as you could have read in the published accounts.
Should the link between inflation and asset purchases be cut?
Well, you know, my position is that the monetary policy stance is composed not only of our asset purchase program, but by a wide array of instruments that all are pretty supportive at the current juncture. So my position is that we should look at this broad array of instruments, and not only at one instrument, the asset purchases.
I want to talk about the phrase well past, because this is something that the market is very much focusing on. We need to discuss what it means, the end of the net purchases in relation to interest rates. Does the guidance need to be more explicit to avoid market volatility?
Well, this could probably be one part of our discussion, whether to complement any decision on the asset purchase program and on communication regarding the asset purchase program with a bit more specificity with respect to the interest rate guidance.
What kind of specificity? A bit more of a time frame beyond just the words well past?
You alluded to that. I think well past is a rather vague time dimension, so it could be about specifying what well past mean. But again, this is a debate that we will have to have in the Governing Council. I'm not anticipating that.
What time frame are we talking about, though? 3 months, 6 months? Could a rate rise come before March 2019 if the net purchases end in September?
I think this is not giving you any new response in the sense that I'm not speculating about our future interest rate paths. Can just tell you that the market expectations that have gathered, given the economic situation that we are observing, given our previous communication, expects interest rate moves mid-2019, and I would say, given this environment, this is not completely unrealistic.
All right. Is there a possibility then that the tapering beyond September, because there are some on the Governing Council who have talked about a short taper, could that tapering be extended to sort of avoid the guidance on a rise in interest rates?
Again, this is also a discussion that we will have to have in the Governing Council. What does the end of the net asset purchases mean? Do we have a rather quick end or a prolongated tapering? And as you might know, my position on the sovereign bond purchases is a rather skeptical one. So you can guess my preferences from that, but I'm not second guessing future decisions of the Governing Council.
But do you feel that others on the Governing Council are listening more to your preferences?
I think we listen to each other and we discuss.
Responding?
I think we are discussing in the Governing Council, we are changing views, and that is then reflected in our monetary policy decisions. And I think there's a broad shared view in the Governing Council that the economic situation is rather good, that we haven't seen such high growth rates for a decade, that the expansion is broad-based, and in that sense, this opens a perspective towards monetary policy normalization.
On the economic situation, which you've just mentioned, a lot has happened since the ECB last put together its projections, a German wage deal, which I know you've talked about, volatility in financial markets, just to mention a couple of things. How has the inflation outlook changed since then?
Well, I think it has been rather confirmed by the incoming data. You alluded to the wage negotiations in Germany. I think they are rather in line with the assumptions that we fed into our forecasts. And I would say they confirm the conjunctural picture that we have drawn before. And I would say they also raise the confidence that inflation will rise according to our forecasts.
I want to talk a bit sort of about the Bund scarcity issue. If almost all private investors have been squeezed out of Bunds, which is what your colleague Benoit Cœuré suggested recently, isn't that a dangerous position to be in? Will the ECB be able to get yields back up again fast enough when it actually wants to exit?
Well, I think that's not our main concern at this juncture, but Benoit rightly alluded to changes in the market structures that our program hasn't used. I think he had rather a positive aspect of this in mind by arguing that this could dampen volatility that you must expect in a period of normalization. So I think the main point he wanted to make is that this is a positive factor in the sense that it helps us orchestrating a policy normalization that is not steering too much market volatility.
I understand, Dr. Weidmann, that you like to climb the 12 flights of stairs up to your office to keep fit. Yeah. I understand also that Mario Draghi has more like 40 flights of stairs to climb. Are you trying to get fit for a future role?
I'm always trying to remain fit. So in that sense, I think this has nothing to do with any future personal decisions.
How might a Jens Weidmann ECB presidency look different to a Mario Draghi one?
You see, that's a decision that is still way ahead. Mario Draghi's term will end only late 2019, and I think it's way too early to speculate about consequences of any of another ECB president or speculate about this decision.
I just want to ask as well about the US, for our US viewers. What are you expecting to be different under a Jerome Powell Fed to a Janet Yellen Fed?
Well, first of all, I would expect a lot of continuity. I mean, Jerome is not new to the business. He has been with the Fed since 2012. So my take is that we'll see a continuation of the policies before, given that the economic situation is changing and that the Fed is adapting to that.